Hey, welcome everybody. Mynor Ramos here along with Mike Domico, and we are with Advanced Insurance Strategies, and we've been covering the 8 banking principles. And today we're going to talk about number 8, strategic payoff. All right, so let's play a game real quick. Mike, which one of these accounts would you pay off first? But let me introduce them to you. You have a credit card, a line of credit balance of $21,000 at 7%. I know I'm really putting you on the spot here. You
Okay.
have a furniture account, you owe $4,300 and it's at 6.25%. You have a student loan that's $7,700 at same rate, 1.25%. Ooh, then you got that car. That car is $42,000 at 6.75. That's your auto loan. Let's put that's on top of the mortgage. That's 226,000 at 6.5%.
I
And
used to like you.
yeah, I know. Listen to this one. You're gonna like this one. How about that RV or maybe the trailer? 27,000, the trailer loan, 6%. Now, okay, I did that as a trick to you because if you had an extra $10,000, which one of those would you pay first?
The one off the top of my head would be the auto loan.
So if I asked that question in a room of 100 people, I would get 100 different answers.
Oh yeah.
And the explanation that would say, because of the rate, because of the balance, because of this, because of that. And so like there's a strategic way of paying off that debt based on, let's just call them algorithms, right? So how does someone go about doing that? How does someone, so let me just throw a few out there. Like everybody knows the snowball effect. Okay. Not going to get into the snowball effect. Everybody understands how that works. Some people call it, the other one is the avalanche, because the
Right.
avalanche is the higher, highest interest rate. But which one is the best, absolute, mathematically speaking, the absolute best one to pay out first? That depends. That depends on the 4 major numbers, right? The
Right.
person's income, the person's, expenses, their debt, and their cash flow. That plays into that role. But what I wanted to do is I wanted to paint a picture of what usually happens with people. You know, they've done the best they can with the information they've been given, with the education that they've gotten. And, maybe they'll listen to somebody, in the cafeteria, they're having lunch and somebody's talking about it and they think, that, Bob's uncle is a financial advisor, he and they're none of all of the information that it doesn't apply to them necessarily. It depends.
Right.
So when we're talking about strategic payoff, um, think like a banker. What would a bank do if they had all these debts? And now most people that we're talking to they don't have necessarily the benefit of having these actuaries, writing down these formulas and going through all the stuff. I think there's floors of actuaries at banks and insurance companies, right? Well, there are some ways that we can do that, and Mike and I, there's a software that we can use, and some of our clients, we put them through it. We do caution them. There is no mathematical formula. There is no spreadsheet. There's no CPA, engineer, financial advisor, anybody, or even a software that will get the ball to move if you don't do anything with it.
Right.
It's about what you do with the information that you're presented and the steps that you take to move forward. And that's what gets you to economic mobility and gives you the opportunity to have these concepts. So we've covered 8 different banking principles. If you liked the principles, tell us in the comments which one did you like the most. Now, if you wanna hear more about, anything in particular, let us know. We'll be bringing some content to you. But remember, we've been telling you about some webinars that we're going to put the links in the descriptions. We have our contact information in the descriptions. Reach out to us. I know Mike. Mike, would you like to talk a little bit about how you, when a new agent comes to you, they've been beat up. Unfortunately, look, it's right.
Yeah.
However they came to you, but what do you do with them? Like very briefly, what do you do with them to make sure that they, have a good experience?
This was a setup, Mynor. I know that.
Really is.
So yeah, Mynor, thank you for the opportunity. I have been in the insurance industry a little bit over 52 years. I tell people all the time, I don't know all the answers, but I have heard most of the questions. So I'm on the right path, I think. When a new agent comes in, I believe it's my responsibility to give back. This industry has been fantastic to me. I've literally toured the world. If I can help a new agent anytime, anywhere, all I gotta do is call me up. And, after we get through the niceties and the introductions and all that, I'll be glad to give them any information, help them on an actual case if they want. And I do that with no charge. And I have contemporaries that say, Mike, you're insane. Why do you do that? I can get paid X number of dollars. And I says, well, you know what? I've gotten paid already. I don't need to beat up some young agent out of a buck or two. And your method is your method and mine is mine. And I believe in karma. So if I can help an agent, I'll be happy to. And I'm not looking to gain anything other than, making a better agent, because I am interested in that. I think our industry has some severe problems, and having good agents is certainly one of the solutions. Now, if an agent says, Mike, I really like what you're saying, but I don't feel comfortable, I can't go out in the field and do that, then I'll, maybe discuss going out with that person. And that person has to understand that I have to cover my E&O and I have to cover my expenses. So there would be a split, as we refer to it in the industry. But other than that, if I can help with an illustration, if I can help with an idea, if I can help with a concept, more than happy to.
Give more than what you're receiving, and it always comes back to you.
I can't help. I mean, that can't happen. I always get more than whatever I gave. I can't give enough, so that's fine.
That's great. Well, that's why you're making a difference in the insurance industry. But guys, this has been another episode of Advanced Insurance Strategies. We have just covered all 8 banking principles. Mike, thank you for your time. Guys, keep watching our next future videos, and don't forget to hit that subscribe button, like it, and share it with everybody that you know. Thanks again.
Thank you, Mynor.